Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. This is the Kickstart video for October 1st. It's start of the new fourth quarter. So let's in the Kickstart video, I take a look at the euro versus US dollar, dollar versus yen, and sterling versus US dollar from a technical perspective to try to set the roadmap for the trading day for the technicals, not only today but going forward as well. So let's get started. Looking at the euro versus US dollar on the hourly chart, I want to point out this level right here, and I did it in most recent videos as well. Look at all the number of different swing lows that came in here. This is just over the last 4 or so trading days, forming this floor right here. Each time the market came down there, we saw bounces, 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 bounces all the way to the upside. And on the upside, we also have a nice little ceiling, a little wider up here. But yesterday's high price came in between the high price from Friday and the high price from Wednesday of last week and found willing sellers not once but twice, and the market eventually rotated to the downside. Now, in trading yesterday, we did get below that, the whole floor on the downside right here, and that should have sent the price firmly further to the downside. But we did find early buyers against the 50% retracement level right through here. We rotated back to the upside. In between what was resistance up here against a 200-hour moving average and support down here against the floor. And so that had to be resolved in trading here today. And the resolution came when we fell back below the old floor right here. You can see how the price fell, came back up toward that level, and then fell further to the downside. We did have PMI data come out weaker than expected, or at least a little. Most of the indicators from the PMI were below the 50 level, which indicates a contraction in the manufacturing sector. We also saw the CPI flash estimates in the Eurozone come in a bit weaker than expectations as well, and that helped to contribute to the downside momentum here in the euro versus US dollar. P.S. Fed Chair Powell yesterday spoke, and he said that he doesn't, basically said it doesn't see a 50 basis point cut, that 25 basis points cuts seem to be the recalibration speed that the Fed will likely to follow. That implies 2 more cuts between now and the end of the year. The market still prices in about a 40% chance of a 50 basis point cut in November. We will see. Nevertheless, technically, as we're talking about here, the next key target comes down here against this swing area. I have outlined where there was first some swing highs right here, broke above, came down back toward the Tesla level, moved above higher, came back, tested that level again, and then fell below the level through here. So this is a point of inflection, reflection, where the price either uses the level as resistance or uses the level as support. We broke back above that level here and retested it here. So there's a nice little pattern going on there. And so this level is going to be the key support level in trading here today. If we come down to it, we could see some support buyers that push the price back up toward the 61.8% retracement level. That was also this low right here. If we get above that level, and then we move toward here. That's if we continue this move to the downside. Now, conversely, we could see increased momentum to the downside like we saw in trading yesterday, in which case we'd expect or would want to see further momentum in that direction if we can't, if we do something like this, like we did yesterday. However, where we broke below the level and then reestablish support against the level right through here and move higher. We did that down here, let's say broke below the level and started to move higher, then I expect a rotation back to the upside, just like we saw in yesterday's trade. So this is going to be the key level here, folks, between 1.1064 and 1.10678. On the top side, if we start to see more momentum above the 61.8% retracement, look for this level area right here to hold resistance. Let's take a look at the dollar versus yen next. Again, we'll look at the hourly chart. And on the hourly chart, what do we see? Well, I see the price moving back above the 100 and 200-hour moving average and traded yesterday. We started to move above those moving averages here, and like the euro versus US dollar, we failed on a little break to the upside, rotated back to the downside into the close, and moved higher right here. Now, we did come up toward this 144.58 level. What's the significance of that? Well, if we go to the daily chart and look at 144.58, that's a 50% retracement of this move up from a January 2023 low to the high price that we saw here in 2024. The 50% comes in at 144.58. In last week's trade, we didn't move above that level, but could not sustain that, rotated back to the downside. So let's go back to the hourly chart. Look at that 58 level, and the price came up above the 50% of this move to the downside at 48, but it held below the 58 level and rotated back to the downside. We are now back down toward the 100 and 200-hour moving averages. And this is going to be a key barometer level for traders in the short term today. Move below it with momentum, and should see further downside momentum in the dollar versus yen. Conversely, find support buyers against this area, and we could see a rotation back toward our 50% levels between the 48 and 58 level on the top side. Get above those levels, and it opens the door for further upside momentum. Let's take a look at the sterling versus US dollar, and we'll look at the hourly chart here. And what we notice here on the hourly chart is lots of levels up through here, here. All these highs through here between 134.11 and 134.33. It's only about 22 pips. And we do have lower highs through here. That sort of gave traders a negative bias yesterday. The 100-hour moving average had some moves below the moving average, but not much momentum. But we did see increased momentum to the downside. But what do we in trading yesterday? What do we do? We found support buyers right near this swing area through here, where we had a number of different swing lows and highs going back in time. So that, and then we saw that big bounce to the upside, a rotation back to the downside, where we had that little failure at the close and rotated back higher. So there was, again, another decision that had to be made. And we get above the 100-hour moving average, and it did, but it failed again. So we see failures below the 100 through here, failures above the 100-hour moving here. So the bias turned to the downside. The PMI data obviously contributing to the downside move, and we fell below the 200-hour moving average finally. That was the first time since going back to this day right here around September 12th. So getting below that level was more bearish, and so that has tilted the bias more to the downside, getting below the swing area right through here and moving down to a low target level right through. Well, let's put it back through here where we had swing highs and then swing lows going back in time. But this is the last floor here before we moved higher. So finding support against that level is somewhat positive, but the tilt is more to the downside in trading here today, folks. Let's watch this level right through here. But certainly, I'll say that as long as we stay below the 200-hour moving average, bias remains to the downside for the sterling versus US dollar. Move above that level and all bets are off. So watch that 200-hour moving average to see if it keeps the sellers in control. And if so, then we'd eventually see a break below this floor here and move toward the 38.2% retracement of this move to the upside. So there you have it, a detailed technical look at the three major currency pairs to kickstart your trading day. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.